Have you ever stared at a blank spreadsheet in January, feeling that mix of hope and dread about your financial goals? You know you should be making a plan, but the advice is everywhere. Save more, invest smarter, pay off debt, start a side hustle. It's overwhelming. And that's why most New Year's resolutions fail by February. There's just too much noise. I used to be trapped in that cycle. I'd set 10 different goals, get paralyzed, and end up making no progress. The breakthrough came when I realized wealth isn't built by doing everything at once. It's built by focusing on the three things that actually matter. In 2026, forget the complicated plans. We're cutting through the noise to focus on the only three financial goals that create real, lasting wealth: building your defense, launching your offense, and making it all automatic.
Let's start with defense, because you can't build a fortress on quicksand. Your first and most urgent goal for 2026 is to eliminate all high-interest debt. We're talking about the financial emergencies that charge a punishing rate: credit cards, personal loans, and any car loan with an APR above, say, 7 or 8%. This isn't just about the math, though the math is brutal. Carrying a $5,000 credit card balance at 20% interest costs you $1,000 a year just in interest. That's money that vanishes, doing nothing for you. But the psychological cost is even higher. It's a constant background stress, a weight that makes every other financial decision feel harder. You're not building wealth, you're just funding a bank's profits.
So how do you attack it? Use the avalanche method. List all your high-interest debts from the highest APR to the lowest. Pay the minimums on everything, but throw every extra dollar you can find at the debt with the highest interest rate. This is the mathematically fastest way to reduce the total interest you pay. It's like putting out the biggest fire first. Create a simple plan. Calculate how much extra you can pay each month. See how many months it will take to be free. That timeline is your motivation. The mindset shift here is profound. You stop being a servant to your past decisions and start becoming the sovereign of your financial future. I remember the day I made the final payment on my last high-interest loan. The relief wasn't just financial, it was this massive psychological burden lifting. It was the first time I felt truly in control. That's the foundation we're building. With that firewall secure, we can finally start building wealth. Now that you've built your defense, it's time to go on the offensive. Your second goal for 2026 is to hit your first $10,000 invested. This isn't an arbitrary number. It's a critical psychological and mathematical tipping point. Before $10,000, saving and investing is a chore. After $10,000, it starts to feel real. It's the moment your money begins to work for you instead of you working for your money. That's the wealth accelerator. So, what's the order of operations? First, you need a small cash buffer. I'm not talking about a full emergency fund yet. That comes later. I mean having $1,000 or $2,000 in a high-yield savings account so a flat tire or a broken appliance doesn't force you to top your investments or worse, go back into debt. Once that mini buffer is in place, every extra dollar goes toward building that $10,000 investment pile. In 2026, your priority list is clear. Step 1 is always to get your full employer 401k match. It's an instant 100% return on your money. That's non-negotiable. After that, the Roth IRA is your best friend. Your money grows tax-free forever, which is an unbelievable advantage over decades. Seriously, only after you've maxed out those tax-advantaged opportunities should you consider a regular taxable brokerage account. Now, what do you actually buy with that money? Keep it incredibly simple. For 99% of people, the answer is a low-cost, broad market index fund. Think an S&P 500 index fund or a total stock market fund from a provider like Vanguard or Fidelity. You're not trying to pick winning stocks. You're buying a tiny piece of the entire American economy. The fees are minuscule, and history shows that over the long run, this simple strategy beats most professional investors. Let's visualize why $10,000 is so powerful. If you invest $10,000 and it grows at the historical average of 10% per year, it doubles roughly every 7 years. In 7 years, that's $20,000. In 14 years, it's $40,000. By the time you're thinking about retirement, that single $10,000 seed could be worth over $100,000. The first $10,000 is the hardest. The second $10,000 is easier because your money is already helping you earn the next chunk. You hit this milestone and you've officially changed the game. You're no longer just a saver, you're a capital owner. You've built your defense and launched your offense. Goal number 3 is what makes it all permanent. This is the identity shift, automating your financial future. Relying on willpower is a losing strategy. You have busy weeks, stressful months, and moments of weakness. The only way to win is to build a system that works even when your motivation is at 0. This is the pay yourself first principle, but we're taking it to its logical extreme. We're building an automation stack. This means setting up rules so that money moves to where it needs to go before you even have a chance to spend it. The moment your paycheck hits your bank account, a portion is automatically split off. Part of it goes to your high-yield savings account for that emergency fund you're building. Another part goes straight to your investment account to keep fueling that $10,000 goal and beyond. Set a default contribution percentage for 2026. Maybe it's 10% of your take-home pay. Maybe it's 15%. The specific number matters less than the fact that it's automatic. You decide once, and the system executes for you, forever. The only manual step you need is a quick quarterly check-in. Log in, look at your accounts, make sure everything is running smoothly, and that's it. You're not stressing about daily market moves or agonizing over every purchase. This is how financial discipline transforms from a struggle into an identity. When saving and investing happen automatically, you stop seeing yourself as someone who is trying to be good with money. You simply are someone who is good with money. It's baked into your routine. The freedom this creates is incredible. You stop wasting mental energy on constant money decisions. The big, important financial goals are already being handled in the background. You get to live your life with the confidence that your future is being built automatically, one paycheck at a time. These 3 goals work together as a single powerful system. The debt payoff frees up your cash flow. The $10,000 investment milestone gives you a tangible target and proves that building wealth is possible. And the automation makes the entire process effortless and permanent. This isn't about making 2026 a year of deprivation and stress. It's about making it the year you install the machinery that builds wealth for you, so you can focus on what actually matters. But here's the 2026 edge that makes these goals even more powerful. New, higher IRA contribution limits give your automated investments a bigger runway. And with high-yield savings accounts still paying meaningful interest, your cash buffer isn't just sitting there. The cost of waiting, however, compounds just like your money. Inaction is the most expensive choice you can make. So that's the system: defense, offense, and automation. Focus here and you transform financial anxiety into unstoppable momentum. The choice is yours. Take the first step today. If this video helped you understand money just a little bit better, do me a favor and hit the like button. It really supports the channel. And if you want clear, simple explanations about finance, investing, and building a better financial future, make sure to subscribe and turn on notifications. New videos are coming regularly to help you make smarter financial decisions without the confusion or hype. Thanks for watching, and I'll see you in the next video.